following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surround yourself with people who believe you can. Market-wise, let's take a look at it out here. We have the Dow Industrials down 202, Nasdaq's down 79, S&Ps are down 30, gold contract up $17.10, trading at $1,240 an ounce. Silver up 14 cents at $15.19 an ounce. Platinum up $9 at $9.54 an ounce. Copper is getting smoked, down 7 pennies at $2.07 a pound. Light sweet crude down 46 cents, $37.30 a barrel. Bonds, the 10-year up 17 ticks, 130.107. 30-year up a full point and 20 ticks, 167. King dollar up 94 ticks at 94.53. The euro is down 23 to $1.13, and the yen is trading at 108.39. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have with the SPY? SPY out here right now, we have the Dow Industrials down 1.1%. S&Ps are down 1.5%, and the Nasdaq's down 1.5%. We take a look at the SPY. The SPY's back $2.88. You know, we go topside yesterday with 91 million shares. You're backing down today with 80 million. You're backing into the 92 million. So it's going to get a little tricky in here. Bottom line is that that's on the SPY. You're still backing down with lighter volume, and we'll see if, in fact, you get an expansion of over 92 million on the way down, meaning by 4 o'clock. Inside the indices are really light on this pullback. The indices on the NYSE right now, we're 543 million. That's saying the indices is going to come in at about 800 million. That's light. That's saying you'll still go topside. Inside the Nasdaq's at 1.375. That should come in. Well, we'll see where that comes in. That could come in at the 1.75, 1.8. You know, we're going to know soon enough. Inside the NDX 100, what do we have? You take a look at the 3 Qs. 3 Qs right now are backing down with 23 million shares. We're coming into 29 million. So that's going to be the correlation right there as to how are we backing into that number. You know, and we'll see whether you get that expansion. The first time that we did get any type of expansion on the way down was when, let's see, it was 2 days ago, I believe, and we came right back. Bottom line, though, the way this market's still trading, guess what? You get a consolidation, but this ABC structure on the way up, to me, still wants to finish out. And it's going to be really wild if, in fact, that's what we get. Because today, all week has been pretty deviant, but today's a really nice deviant day inside the marketplace. Gold contract. What do we have with gold? Bottom line, gold wants higher price. You get a couple of these equities taking swing points out, taking them out with volume. We take a look at the gold contract itself. You've done 180,000 contracts. That's wide price spread, accelerated volume. You're up $17.50. Next step on gold is up to this. We had an intraday ABC structure up to 1250. We haven't hit it yet. We hit 1245. That's on the intraday. On the daily, your next stop, and this is 1273. 1273 is the high that was generated on the 17th of March. You know, what we had done the last couple of days, let's see, today's Thursday. So on Tuesday, we peaked our head right up above that downtrend. And sure enough, it had follow through. On Tuesday, we did 157,000 contracts. We've done 180 right now. If you take a look at Anico, Eagle, AEM, you're going to see that you're going with force, man. And the equities are what basically brought up the metals the last time we were here, too. Well, actually, right off the bottom. So Anico, Eagle, you're at 2.1 million right now. 2.2 is the number. Bottom line is that you're already into the lows of the high. That's saying to me that it's going to basically go after that high, which is 39.48. Now, silver, that dog silver, man. If we take a look at silver, so this is what you have. SIK6. So check it out. Silver trading at $15.19. Now, we have volume. Okay, you get 49,000 contracts, which is good contract volume. Silver, to me, has to stay inside $15.22. You know, we got to $15.36 today. Couldn't hang inside there. So bottom line, we'll see how this comes into the close. I like the aspect that we had an expansion of volume. The sellers are still here. There's no two ways about it. And, you know, we'll see if it can hang into that $15.22. Where the $15.23 rather. Where the $15.23 comes from, folks, that's where we come down hard on the 23rd of March. We went from $15.93 to $15.22, and you did have an expansion of volume. We had 76,000 contracts. Now, what we didn't do, so the bearish part of that is that you come down hard and you had wide price spread. The bullish part is that it never got to the lowest swing point. Even when we pulled back, we didn't get down to the $14.61. So we'll see where the whole baby shakes out, but there's no doubt that silver still has sellers inside that contract. Let's go over to the HGK. Copper. So copper is getting hit hard out here. We've done 96,000 contracts. That's not bad. Okay, that's pretty cool. Okay, so now you get a big expansion of volume. There's no doubt about that. You're at 207 a pound. Well, it's going to reject the 208.20. That's where we had a nice sign of strength on February 26th. You know, so right now below that. You're below that. That does open up. You can go test the low out there of $2 again. We'll see. You're coming into it the exact same amount of volume, but yet you had a wicked expansion of volume from the past 2 weeks, which is saying, guess what? At least the lows of today in a copper contract would have to get tested, and we'll see whether it can hang there. Oil. We get the oil contract. Oil's building cause for higher price. You know, oil is basically a sideways move out here today. You've done some beautiful volume, though, man. Yesterday, we go topside with 750,000 contracts. Today, you're sideways at 539, and you're still at highs, which is a beautiful thing. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 180. Nasdaq's off 73. S&Ps are down 27. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 194. You get the Nasdaq off 77. S&Ps are down $30. And as we do each and every Thursday, we have Andy on a lot more than on Thursdays, but on the first hour, we get our man, Mr. Andy Heck. Now, don't forget, folks, on Tuesdays, Thursdays, right after my show's over, 5 o'clock, Andy does an outstanding show right here, the Technomental Commodity Hour. No matter where you are right now in the world, or actually in this great country, if you're in your car, listening on your car radio, don't forget, 5 to 6 o'clock, and in fact, you can get us 24 hours a day. But you can listen to Andy tonight, 5 or 6 o'clock, right on your cell phone. Just go to TFNN.com, hit Tiger TV. You get the audio, you get the video. And as you come over to TFNN, you're going to see right on the front page, actually, we just put this up, Tax Day Tiger Dollar Sale. So if you want to basically make 40%, up to 40% on your money, folks, bottom line is that Tax Day this year ends April 18th. So if you get any products from TFNN right now, you're looking to get any in the future, you want to save some money, check it out on the front page of TFNN. The way the Tiger Dollar sale works is this. They're good for all products at TFNN, totally transferable, no expiration date. The way it would work is that you buy $500, you get $600, which is a 20% bonus. If you buy $1,000, you get $1,300, which is a 30% bonus. If you buy $1,500, you get $2,100, which is a 40% bonus. And that being said, bottom line is our man, Mr. Andy Hecht, he is going to be doing 12 lessons. He's going to be doing a course, the 12 essential lessons for trading commodities. We're going to talk to him about this right now. If you're interested in this, don't remember that you can get the Tiger Dollars, you can get into course, and get a great education. Andy Hecht, what's going on? Andy.
Tom,
Yes,
how you
sir.
doing?
I'm doing great, man. Yourself?
Oh, good. I'm good. I'm good.
Is it still 90 degrees in Vegas?
No, it's a little. The clouds came out today, but it's still nice.
That's beautiful.
It's, upper 70s, low 80s. It's good.
That's heaven, man. That's
I
heaven.
read this morning they're going to get some snow in New York City and Boston on Saturday.
That's sick. That's a sick scene.
You know what? The weather is a little crazy.
There's no doubt, man.
There's no doubt.
Listen, if it's April, well, yeah, I've seen snow in Boston April 15th. I've seen that plenty of times.
Oh yeah, I mean, I've seen it in New York City too.
Sure.
I've seen it in New York City. So I heard you talking about the Tiger Dollar sale, an excellent opportunity.
Yeah.
for all the newsletters and for the upcoming 12-part course, which is going to commence on May the 8th. And what we're going to do is we're going to do it every other week.
Okay.
For 4 weeks.
Yeah.
We're going to do 3 sessions a week between 5:30 and 7:30.
And we take it's every 2 weeks, right?
Every 2 weeks.
Yeah,
Right.
right.
3 sessions every 2 weeks, total of 12 sessions. And what we're going to do is go through, all of the topics related to and look at all of the correlations within the commodity markets. We're going to start out with the markets and demographics. We're going to look at physicals versus derivatives. We're going to look at market structure. Then we're going to look at the backwardation versus contango and what that means and how to spot things there.
Yes.
We're going to talk about term structure. We're going to talk about processing spreads, location spreads, intercommodity or substitution spreads. We're going to look at quality spreads and what these things can tell us. Then we're going to sum the course up with a session on technicals that I look at in the commodity markets. Options, but not in terms of trading options, but what to look for in option data to give you clues. And then we're going to look at the ETF and ETN products, not only as an opportunity to express those views, but also for the wealth of data that they provide in terms of direction. So it's a total of 12 courses. I mean, with the Tiger Dollars, you're talking basically kind of with the Tiger Dollar sale, you're talking basically $30 per course.
Right. Which is amazing. I know.
Which is amazing. So, I encourage everyone to sign up. I hope we have a big turnout for the class, and it will be archived for a year because it'll be a very evergreen. I'm using a lot of the types of things that I teach. Week after next, Tom, I'm heading out to Denver to teach in the Foundation of Commodities course at the University of Colorado Denver Business School, the J.P. Morgan Center for Commodities.
Yes,
and
that's
believe
so
me,
cool. Right.
The students who come to this course pay a lot more than this.
Right. How cool is that, right?
Right.
And
So,
folks, what you're
special
getting,
for
the thing that I think is amazing is that, you're not only getting the course, you're getting Andy's 30 years experience, like, inside the commodity markets, which is a whole different animal, man. I mean, it just is.
Right. And you know what, Tom? I've learned from some of the most prolific and infamous traders in the world, guys like Andy Hall, Manfred Koppelman in copper, some of the top sugar traders and grain traders, some of the, really kind of a very interesting cross section. Even, at Solomon, from people like John Merriweather, who ran long-term capital management.
Sure.
I reported to him. So a lot of very interesting, people kind of formed the way I look at markets.
You know what's so cool, folks, is that, this happens meaning a lot just in the business where, people say, where can you learn this? Well, in the business that we're in, the only way you really can learn it, you can go to the best Ivy League schools and it's just doing it, right?
Right.
But there's an amazing article today in the New York Times, and check this out, Andy. I was reading this morning, right? So, in the Times this morning, they were having, and they were talking about Harvard. They were talking about all these big schools. What they've just decided to do, okay, is the professors that get paid there, folks. Most of the big professors, it's all about research. That's what this article is about. Mm-hmm. Now they feel that it's not that they're going to change that. They're going to keep that there. But now what they're looking for is that they're looking for people that have actually done different high-end jobs, whether it's what we're doing here, whether it's in other professions, versus the theoretical deal. And they're going to start bringing those people into universities, which totally makes sense.
Right. And by the way, that's how I wound up with UCD. I mean, they got in touch with me. Right. And, I'm there's a lot of lecturers in this program. There's about 6 of us who do the program each year. I'm the one who has the practical experience. They have some people from academia. Yep. They have some people from both, but they definitely want practical knowledge in these courses for the students.
Yes. No, it totally makes sense. It totally makes sense.
Yeah, so, I mean, it's good.
Let's talk markets here. And folks, so you can sign up right in the front page of TFNN. You can get the tax day Tiger Dollar sale Sign up. You're going to be get an amazing education.
So,
hey,
copper. Let's start with copper.
Well,
baby.
let's
Oh,
yeah.
go ahead,
We can start with copper. That silver dog's driving me crazy.
No, I want to go to silver because I think that dog is gonna start to bark. So let's talk copper here for a minute. All right. So copper, ugly day. Hey, negative bearish key reversal on the daily chart here.
Yeah.
Big volume. It's got all the things.
Yeah.
Listen, it's got a whole $2, no question. Big support at $1.9355. But there are some positives in copper. There's a backwardation on the LME as of last night of $20 a ton.
Okay, hey, you stay right there.
Sure.
Quick break. We're going to bisect and dissect copper. You stay right there, folks. Andy and I are coming right back. Dow Industrials right now are down 194. Nasdaq's off 76. S&Ps are down 28. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 180, Nasdaq is down 74, S&Ps are off 26. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And, of course, don't forget, right after my show today at 5 o'clock, 5 to 6 Eastern Standard Time, Andy comes right up, right on your cell phone, TFNN.com, and hit Tiger TV, folks. Okay, so
let's talk copper.
Yeah.
Let's talk a little bit of copper.
Cool. Yeah.
It made a bearish key reversal today on the daily chart on heavy volume. But we also have to look at what else is going on in the world. We have this thing in Japan. The yen strengthened huge today.
Right.
which, and this is sending fears through all the markets that, hey, a strong yen is very bad for the Japanese economy. And it means that they'll probably have to cut interest rates further into negative territory. And that is kind of a contagious thing in Asia, and it's sending fears about China again through markets. And I think that's where the pressure in copper is coming from. So let's take a step back here. All right, and away from the technicals to the world of fundamentals for a minute. And you'll see here, if you can see this chart that I'm putting up on Tiger TV, that total global copper inventories.
I got it.
Basically, right now, and this is the COMEX inventories, the LME inventories, and the Shanghai inventories. Right now, we're about 1.1 million tons. That was at the end of March.
Okay.
Last March, we were at 1.2 million tons. The March before, we were at 1.3 million tons. And the March before that, we were up at about over 1.65 million tons. So inventories are coming down, and this is not a negative for the copper market. The other thing that's going on is that a lot of the grades of ore that have been mined over recent years have been very low grades of ore to put out a lot of production. But at a recent conference in Santiago, Chile, which, by the way, is the largest copper producer in the world.
Yeah, big time, right.
Right. They've said that, hey, they're going back after the higher grade ores to cut production price, but that means production's going to fall. So these are positives. I think that copper is going to surprise. I think that, listen, it's got to hold $2 technically and $1.93 certainly, but I don't think we're going down and making a new low in copper.
Yeah, I don't either. I want to see a test of today's low, that's for sure, but, we'll see.
Right, of course. But interesting, on the fundamental front. Let's switch gears here for a minute.
Okay.
And go over to silver.
Yeah.
Which I know we said, you said, we said it is a dog. It's been a dog for a long time. But let's look at a monthly chart, Tom. And what we're seeing in silver is a very nice little rounding bottom here on the monthly silver chart. And actually, the momentum crossed back in February on the slow stochastic. And you know as well as I do from trading silver for decades and decades, silver, all of a sudden, it does what it's supposed to do.
No, there's no doubt, man. The volatility in silver is unbelievable, folks. There's no doubt. Right.
And at some point, we're going to blink our eyes, and silver's going to be $18.
Yeah,
as long as gold stays up here.
I can see that. That's 1850 sticking out like a sore thumb. There's no doubt.
I agree. Yeah. And by the way, on the silver gold ratio here, a price of $12.40 on gold implies a price for silver that is $7 higher than the current price, $22.50.
Right.
So I'm liking silver here. As a matter of fact, in the precious metals area, it's the one I think is kind of the lowest risk, highest reward, as long as it stays above 1460, which I think is the key support level here on a technical basis.
Well, the cool thing is that the silver stocks are doing great. The silver stocks.
Well,
some of the silver stocks, folks, are up, 150%. So,
but isn't that what flashed you towards gold? That the gold stocks started?
Oh, totally. Oh, no. Listen, I own them. They're fine.
Right.
I just love to.
Silver metal is going to make a run eventually.
Let's go. We're going to take a call. Right.
Sure.
Let's go to Alex in Newton. Hey, Alex, what's going on?
Hi, Tom. Hi, Andy. How are you doing?
We're doing great. Yourself,
Hey,
man?
Alex. How are you?
I'm doing good, thank you. I have a question to both of you, and especially to Andy, about the commodities. I completely disagree with you. I'm short copper from 292, and I think it's going to 165. But my major question, I agree that gold is going much, much higher. That's the only one commodity I can see at the moment. But my major question is, I got your report, and if I can name one of your positions and ask about this.
Yeah, sure. Yeah.
Okay, so it's wheat. WEAT.
Okay.
I'm short. I don't see any reason to buy it. I see a lot of reasons to short it, but I don't see any reason to buy it.
Wheat?
And I'm talking about technicals only.
Okay. I mean, fundamentally, I think that, listen, when it comes to wheat, the question, Alex, here is the weather this year. Wheat and corn are very, very close to production cost. Granted, we've had some very big supplies and we have inventory in the market, but the shelf life of wheat is brief, and wheat is a highly political commodity, and, you know, this commodity can turn on a dime with the weather. The potential for a weather-related issue this year has risen because for the past 3 years, there's been no weather-related issues in any of the grains. I believe that the downside's limited. And I agree with you right now. Right now, for a short-term trade, wheat is a short. But it is not, in my opinion, a long-term short because it is close to production cost. And when something's close to production cost, you know, you have to take it means to me that the downside's limited. The downside potential for profits is limited. The upside is explosive if some exogenous effect comes into the market.
Doesn't that mean that you're trying to catch a falling knife?
Well, I don't think it's a falling knife because I think that the downside is very limited. I don't think that the wheat price, given demographics, is going to fall, you know, precipitously below $4 a bushel. I just think that, you know, production cost is much higher today than it has been in years past. And also, world demand due to demographic changes is much stronger. So, you know, when you do have these weather issues that play with supply, in the short term, the upside potential for rallies is much sharper than the downside because you do have underpinning support in these markets because of a population on Earth now that's over 7.3 billion people. You know, when old guys like Tom and I were born back in, you know, before 1960, the population of the world was under 2.9 billion. Right now, we're over 7.3 billion, and wheat is a staple commodity. So I agree with you about some other commodities when it comes to some metals, when it comes to some, you know, raw materials. You know, hey, the downside is still there. But when it comes to foodstuffs, you have a large population in the world underpinning, which creates demand, which gives you a bottom. That's the way I look at it.
Alex, just stay with us, all right? We're gonna quick break. We'll come back. Awesome, man.
Thank you.
You stay right there, folks. Alex, Andy, myself, we're coming back. We're gonna be basically talking Wheaties. We'll be right back, folks.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now down 190. Nasdaq's off 78. S&P's are down 28. We got our man, Mr. Andy Heck. We're talking with Alex from Newton, and we're talking about copper and wheat. You know, Alex, on the WEAT, it's kind of intriguing here. Like, I like how that's set up. And, you know, we were just talking about catching a falling knife. That actually came off the lows, okay? So if we take a look at this on, you know, the 2nd of March, you know, we hit a low out there at 849. You come off with strength, nice strength on the 3rd. You had an additional sign of strength on the 8th. And then when you come back, the first time you come back was nice. You come back with 52,000 shares going into 164. Then you had that high volume, 137,000, but you're still basically coming into, yeah, you're coming to 164. And you see how you're coming down today with dramatically lighter volume? So, are you there, Alex?
Yes, I am.
Awesome, okay. So, that setup there, you know, risk versus reward is pretty good. Now, there is divergence. Now, watch this, folks. This is where, so that's the ETF structure for wheat. Now, when I actually go over to the wheat contract that this is trading, well, I believe WEAT trades off a few different contracts, right, Andy? Because I remember
yes,
we had
it trades. Yes, yeah. It's a compilation of Minneapolis, Kansas City, and Chicago wheat.
And goes out so many months.
It does, and that's why I like it, because it smooths out the roll risk.
Right. So this is pretty cool, and this is where you have to understand the ETF structure too, folks. Meaning, inside that WEAT. Because, Alex, when I go to this contract, the July contract, right, it's like, oh, hold it, man, okay? Because this is coming back. It, you know, it had volume on the 31st, meaning we did 44,000 contracts. Today we did 45, so it's like, okay, man, this contract wants to come back to 458. You know, so I can see what you're saying on the contract, and I have a feeling, let me just look at this again. I have a feeling what this has to do with, okay, so WEAT, the investment fund is to have the daily changes in percentage terms of the net asset value of the weighted average of the closing prices, of 3 contracts that are traded. Yeah, I guess it really has to do with how far this WEAT is going out, Alex and Andy. You know what I'm saying?
Right, yeah. Right, absolutely.
Yeah.
The other thing is, you know, if we look at how wheat performed during Q1, it was very interesting. You had basically unchanged in the Chicago wheat, Alex. It was, I think it was up maybe 0.75%. The Kansas City wheat was up 1.65%. The Minneapolis wheat was up over 7%. So, you know, you have different fundamentals for each of these crops, whether it's hard red winter wheat, which is traded on the Kansas City exchange, the soft red winter wheat, which is the Chicago contract, or the spring wheat, which is the Minneapolis wheat. All of them have different uses. You know, for example, lots of pastas are made from the Minneapolis wheat because it's a different kind of wheat. A lot of bread in the United States is the Kansas City wheat. So, but the Chicago wheat is the benchmark for all world wheat, and it kind of reflects the global dynamics of the market. Right now, you're right. The market is bearish. There's a lot of supply, but that can change with weather.
Alex, what about the rest of the commodities? So you think that
I am long gold. I am long platinum. I am long silver.
Okay.
I am long gas, natural gas, big time.
Let's talk about that. Let's talk about natural gas for a minute. And let's pop a chart up there of natural gas. Very interesting here today. It was a very good day for natural gas. We actually had a injection of 12 BCF, and natural gas has put in a bullish key reversal.
Yeah, it went from 198, folks, to 210. Interesting. Okay.
189. Yeah. You're looking at the next contract. You're looking at June or May?
I'm on June.
You're on June. Okay,
Yeah.
I'm still looking at May. But that one went from 189 to 202, where it is right now, and it's on the highs. The key here, Alex, open interest, 1.116 million contracts, higher than it was in December when the market changed. The shorts are emboldened because of the seasonality favors lower price, and you have huge inventories out there. But this market loves to toast and roast the big position, and the big position is short here. No question. By the way, the open interest hasn't been this big, guys, since 2014.
Pretty cool.
So if the biggest position is short, I'm pretty bullish after that.
Right. Right. But, I mean, don't forget to take your profits, because this thing could spike up to 240 and turn around and be at $1.70 3 weeks later. You know that.
Guys, you know what's funny is that in 2000, exactly in 2000,
Yeah.
I wrote my paper when I did my PhD, and after that I issued a book, which is called Techno-Fundamental Analysis of the Financial Markets. So, Andy, copyright.
Very interesting.
That's
I
awesome, man.
actually have Technomental's trademarked, which is pretty funny. That's pretty funny.
That is. I like it.
But
man.
same thing. Technicals and fundamentals. You put it all together, Alex.
It's really
and,
cool
you
when
have
you
a
do
good,
that. I know, man. It's a fact. There's no
Right.
doubt.
Right. You have a real good look at the markets.
Cooking,
Anything
brother.
else?
Thank
Okay.
you so much, guys.
Okay,
Thank
man.
you.
Have a great
Bye.
one, man. Have a safe one.
You too. Okay, just a couple more quick things, Tom.
Yeah.
The Baltic Dry Index traded 500 today. That continues to go up. That is another thing that I think could lend some support to copper. There's more shipping activity going
That's
on
right.
here. And when it comes to oil, it's all about April 17th, and there's OPEC and Russian get-together in Doha, Qatar, because when it comes to, if they come out of there with nothing, hey, oil's going lower because the fundamentals are not strong. Inventories are high, products are weak, but if they come out of there with either a freeze or a production cut, we could see oil spike. So it's going to be, I think there's a put under the oil market until that day, and then, basically all hell breaks loose.
And what oil has going for it also, I mean, in the commodities in general, is that this dollar is a dog, man. I mean, the dollar can't hold price.
The dollar is a dog. There's no question about it. Right. But, hey, the Japanese, I think they're going to have to push. Where are they going to put? What are they going to have, a 10% negative interest rate in Japan?
So,
where you
yeah,
put $10 in the bank and you get back 9?
We'll go by their rates right now, folks. So watch this. So the 10-year, you have to pay Japan 0.6% to put your money, to let Japan borrow your money. If you do it for 5 years, folks, you're paying 0.2%. If you want a 2-year, it's the same thing.
This is the biggest argument for gold, Tom, because gold ain't charging you nothing, and
totally.
PS, it's going higher.
Oh, totally. It's yeah. There's
It's a debasing of fiat currencies,
right.
That's going on,
right.
and it's going to keep pressure on the Fed not to raise rates. They're going to be afraid. Copper, I think, is reacting totally today to Asian problems because copper is a China-driven commodity.
No. One more segment, all right, man?
Absolutely.
Cool. You stay right there, folks. Andy and I are coming right back. And as we're going into this commercial break, folks, come over to our website at TFNN, and you're going to see we just launched it today. It's the Tiger Dollar Sale. It's the tax day Tiger Dollar Sale. You have from now until April 18th to act. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We are down, Dow's down 186. You get the NASDAQ up 74. S&Ps are down 27. And as we come into the close of the market, volume is at 640 million at NYSE. That means we'll do about 850, which is not big volume on the NASDAQ. Composite, I think you're going to do about 1.8, which is an expansion of volume. We're talking with our man, Mr. Andy Heck, and we've been talking commodities. And don't forget, 5 o'clock tonight, 5 to 6, as every Tuesday, Thursday. Andy's got a great show right on your cell phone, TFNN.com, hit Tiger TV. So it's pretty cool that natural gas, Andy, wants to catch a bid, man. I'd like to be trading that for the next couple of years. That's a good little deal. Yeah,
absolutely. Got to get above 207.5. If it does, it looks like it will. It'll fly. It's all shorts. I don't think it's fundamentals here. It's all shorts. And listen, you remember that fund Amaranth?
I do.
They lost over $5 billion in the natural gas market. This market loves to hand out pain like no other.
Listen, I remember, I wasn't in the market at that point, or I was in a different part of the bank or bond market at that particular point, but when Boone Pickens lost everything, you know?
Right.
And the natural gas market, you know?
The one thing you got to remember about natural gas, you can never buy the lows and you can never sell the highs.
Yeah.
You trade the meat in between, take your profits, it keeps going.
And keep, you know, and
say thank you.
Right, there's no doubt.
Right.
You know, to go back to silver again for a second, you know, one of the tigers, you know, Z, thanks for pointing this out, man. You know, these silver stocks are doing good, but guess what? Pan American Silver just is blowing away its highs, man. It has volume. It took them all out. It's an ABC structure on the way up.
I'm telling you, we're going to wake up one. We're going to wake up one day. Silver will be above $17.
Yeah, it's pretty. It's a strong stock, and if this is going to get intriguing because it's like, okay, so we got the high, it comes down, but yeah, I can make a case that this is a pretty big ABC up too, man. It's pretty amazing.
Yep. Big money for Bill Gates. Bill Gates was one of the big. I think he might still be one of the biggest shareholders in Pan American Silver.
Well, let's see. We got.
He was for a long time. He might have. Gotten
Yeah,
I'm not sure.
Let's see. So.
Cascade.
Yeah.
That's his fund. The other thing I wanted to mention before we end up. Is that coffee put in a negative key reversal back on March 23rd.
Okay.
When it made highs at 136.40 and it's gone down to like below 120. Put in another negative key reversal today. So we'll see if that follows through. Looks like it might be headed to the support at around 115, 113. But this thing's been back and forth, and I think it's constructive that it made a new high. Brazil has to produce lots of coffee this year to meet demand. They sold all theirs last year when the Brazilian real was crashing.
Okay.
And, you know, I think coffee's a trade. They're all trading markets, Tom. They're all trading markets. The difference in commodities is for the last couple of years, you initiated trades by selling rallies and then buying back on dips.
Yes.
In this year, I think now you buy the ugliness and you take profits on rallies.
Buy the ugliness.
That's right. Yeah, buy the ugliness. And there is ugliness.
Oh, man.
There is ugliness. It's all, you know what? When Japan has these problems, the market mindset goes to China. And China.
I mean, it seems that Japan's largest problem, right, is that, you know, it's a society that kind of is only Japanese. They're all old and they didn't have any kids, right?
Right. Well, that's a big part of it. But, you know, they also, you know, they're a big economy in Asia, and there's contagion all over Asia, from China to Japan, from Japan to China. You know, you have this lunatic in North Korea there who now has what they say medium-range missiles that could hit Japan. So there's a lot of things that are affecting that economy.
Yeah.
So it's going to be interesting, no question.
No doubt. Well, listen, man, we look forward to the show at 5 o'clock. We absolutely look forward to the workshop, and go right to the front page of TFNN, folks. You're going to see Andy's going to be doing a nice college course right here at TFNN. Guess what? You're not going to have to go all the way out to the University of Colorado to get it. It's a beautiful day.
Thanks, Tom.
Thanks, man. Have
See
a
you in
great
an hour.
one. Absolutely. You stay right there, folks. We're going to be coming right back. Dow right now is down 181. NASDAQ off 74. S&P's down 26. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, you know, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in yourself and everything you can be. James Gardner. Market-wise. is. Let's take a look at it out here. We had the Dow Industrials down 174, NASDAQ off 72, S&P's down 24. Gold contract traded up $18.40 at $1,242 an ounce. Silver up 15 cents, $15.21 an ounce. Gold contract wants higher price. Silver trying to get up there. It had the volume today. Want to see another wide price spread, accelerated volume, and some good follow through. Platinum up $10 at $9.55 an ounce. Copper down 7 pennies. Got toasted and roasted. $2.07 a pound. Light sweet crude off 34 cents, trading at $37.41 a barrel. Bottom line is that with the oil contract, folks, you had a sideways day. You had volume come through once again. Oil wants higher price. The notes, the 10-year note up 17 ticks, 131.07. Bottom line, that has light volume, but it's over that March 1st downdraft. That saying go to higher price. The 30-year bond down 1 full point, 23 ticks, plus 23 ticks, 167.02. King dollar just can't handle higher price. King dollar was up 129 ticks, went to lower lows today, had volume as it goes to lower lows, $94.57 is trading at. That baby King dollar wants to trade down to the 92.50 to 92.30 area. Euro down 29 at 113, and the yen is trading at 108.42. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. SPY today comes back with 108 million shares. Now, you had an expansion of volume as you come back. You're coming into 129 million shares. We're at 203.95. 203.82. It was the high of what it's coming into right now. So you're going to need more volume to get lower price in this market. I suspect what we're going to still have here, you have been in this consolidation at these highs going all the way back now to March 16th. Just give it a day. You're either up, down, or all around. This S&P still wants to finish this ABC structure on the way up, which is a 211 number inside the SPY. Inside the NDX 100, the 3 Qs, what do you have? 3 Qs come back $1.64 today, gave up all of yesterday's gains. We do 28 million shares, and the 28 million is going into 29.9 million. So that's when we broke topside on March 29th. The low of that break topside was $106.73. We go to 108.90. It's just back down, has lighter volume. That's saying the Qs still want $111.84. Right now, you're at $109.03. Gold contract. What do we have with gold? Gold has wide price spread, has the volume behind the move out here today. We'll take a look at a few of the equities. A few of the equities took out their highs out here today. Gold. So we're up $18.30. Did 183,000 contracts. Wide price spread, have the volume. Right now, we're at 1242.10. I expect you're going to make this run coming into the highs. Now, the lows of the highs, folks, are 1250. And intraday gold, this gold contract at an intraday ABC structure on the way up at a 1250 price tag. So I expect what you're going to see is that gold's going to make that run. Then I suspect that's going to be tomorrow. And that's always going to be intriguing because what happens on Fridays in the metals market in general is this. If, in fact, you get a run and you're going topside, it has a chance of going much further than it normally would go. The same is applicable when they want to take it to the cleaners downtown. That is the day that they can take it to the cleaners. I don't suspect that downtown. The reason being is that, number one, you had the price spread uptown, and most of the time when they're taking it downtown on a Friday, you have to be down Wednesday, Thursday, Friday. It's just not a one-day occurrence. We go into the silver market. We take a look at silver. What we had with silver is this. Silver also caught a bid. We did the contracts. It didn't hold the price, though. I would have liked to see silver hold $15.23. You're at $15.21. That being said, I expect it'll go after this high again tomorrow. We went to $15.36. The notes, the 10-year notes, they're trading up their 18 ticks. We did 989,000 contracts. Now, that went over your downdraft of 1.5 million contracts, and it's coming into the high that was generated out here on the 25th of February, where we also had 1.5 million contracts. So I expect you're going to see that turn around, but bottom line, you continue at higher price, and higher price, of course, can get higher price. The King Dollar. What do we have with King Dollar? Good old King Dollar, folks, just can't handle higher price. So if we look at King Dollar, we hit a low out here today of 94. 94.03. That was hit at about 3 o'clock in the morning last night. Volume out here was 26,000, which is short volume, by the way. It's not big volume. King Dollar has one ABC structure on the way down with a price target 1-to-1 of 92.30. Has a high volume swing low that has a price, well, the price is 92.50. So I expect that's August 24th low. That's where we're going to go. We go take a look at the XAU, the HUI. XAU out here up $1.20. You're at $71.09. That is into the bar from the 17th of March. The high was 73.81. The low was 70.70. I suspect what we're going to see is that the XAU, more than likely tomorrow, is going to go after that high. The Gold Bugs Index, bottom line, up $4.90 today. You're at $186.04. That, the low of the high is 179.91. The high is 189. This baby, I suspect, is not only going to go into it, more than likely it's going to blow it away. If we go take a look at a few more equities, silver equity, you got the Pan American Silver took out its highs today, 2.9 million shares, had the share volume also, up 38 cents at 11.38. We take a look at Anglo Ashanti, AU, also took out, Anglo Gold rather, that also, I think it's over the highs, let's see. Oh, okay, so it got over the highs, closed underneath them. Anglo's going to need more volume, but bottom line, also over those highs. We go take a look at the Anico Eagle AEM. What did AEM do? AEM, a nice expansion of volume, 2.7 million, going into 2.2, took that out, trading at 37.87. That's going to go into its high tomorrow. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 174. NASDAQ off 72. S&P's down 25. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished down 174, NASDAQ off 72, S&P's down 25. As we do each and every Thursday at half past the second hour, we have our man, Mr. Basil Chapman. Now, listen, folks, don't forget, at TFNN, Monday, Wednesday, Friday, live programming, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Get all that programming right on your cell phone, TFNN.com on the browser. Then hit Tiger TV, get the audio, get the video. Basil does a great program every trading day, 11 to 12 Eastern Standard Time. Get it right on your cell phone. And as you do come over to TFNN, you're going to see what we put up here just before I started the program today, Tax Day Tiger Dollar Sale. If you have any products that you subscribe to at TFNN right now, or you're looking to get any in the future, this is a great time to go get Tiger Dollars. You can save up to 40% or make 40% on your money. You have now until tax day, and tax day this year, folks, is on April 18th because it's called Emancipation Day in Washington, D.C. on April 15th, and that gives us till the 18th. Let's go over to our man, Mr. Basil Chapman. What's going on, Basil?
Is it Tax Day, Emancipation Day?
Well, what's going I know, it's pretty funny. So April 15th in Washington, D.C. is Emancipation Day. And so that gives everyone in the great country of ours until the 18th in order to basically get those taxes in.
Very nice.
All those extensions in. Just make sure you get them in, folks. That's the bottom line. So what are we going to look at today, Basil?
Well, as always,
hey, first off.
The Dow chart that we look at.
Basil, I'm sorry, just one second. You got to hear this story, folks, okay? Basil, this morning, right, on his program, right? We got to tell the story because we'll keep you on for a couple segments, man. Basil had this morning the story, the penguin story. Tell the penguin story. This was, and folks, on Tiger TV, he had the picture of the penguin with the guy. This was crazy, right?
Well, while I was on the show, I had an email, and it was from a cousin of mine in South Africa. I'm originally from South Africa.
Yeah.
And she sent me this email, and I'm busy with the show, so I didn't read. But the way it read, it said, penguin comes back to 5,000 miles. So what happens is, this man in Rio de Janeiro finds this pretty helpless penguin, and he helps it recover.
Yes.
Penguin goes off. And then it comes back a year later. And every year it's come back 5,000 miles and just to visit.
That is so cool, man. And
yeah, when you think of animals, there's something going on there. One day, maybe 400 or 500 years' time, we'll find out what the animal language is. But they communicate. It's unbelievable.
It really is, man. And, you know, you got to picture something, folks. You know, we're all listening to TFNN. Of course, I'm at my desk, and I'm doing this and doing that, and all of a sudden I hear you say this, and I'm saying to myself, you got to be kidding me. And then I look up at the screen, and you have this picture of this guy and then the penguin, and I'm saying to myself, that is so cool. I love it. Well, thanks for bringing that up, man. It's so freaking cool.
I just needed it. You know, I've been looking at charts for a week now, intensely trying to decipher it. So I said, I need this outlet. I think everybody did. So it was really interesting. I mean, who would have ever
It's
thought
amazing.
about that?
It's freaking amazing.
It is.
So let's see. What am I looking at? Are we looking at the Dow? Yeah.
We're looking at the Dow, and you know that in my work, there's a certain letter in the alphabet I used to label with numbers the peaks and the troughs.
Okay.
And when I started this off, it was at a time when Robert Prechter was very famous for his study of Elliott wave.
Yeah.
And I thought, gee, I don't want to get, and there were a lot of numbers there. And I thought, I'm going to use letters because it's a little easier. But I mean, it's done in numbers or letters. Steve Rhodes has worked out something. I see he has numbers. So it doesn't matter. But the real point is, when I get to this sixth highest peak, this peak F, I've got to say, if the technicals are failing, be careful because something here can happen that's different. So this is the Dow chart, and this is the daily chart that I show my subscribers every day.
Yeah.
I have this little blurb on top, and then I write another one at the bottom, and I do a lot of charts like this. I send them out every day. It's a very comprehensive look. But this is the chart I mentioned to you last week. It's something that I was looking at, and I showed it on my show. I showed it over the weekend to my subscribers. If you look at the low that was made on August the 24th in the Dow at 15,370, I've circled it here, and you count the number of days, that's market days, to the top where it made the sixth highest peak F, it was 50 days. The buy mode was completed in 50 bars.
Okay.
It comes down 1, 2, 3, 4 days, and then it breaks the 9-period moving average, that purple line, and then it goes sharply down underneath the orange one to the 200-period moving average, and then it rallies back. And this has been part of the character of this market for so long, that market tops, even if they're shorter term. Look at this one right back from here. You see the word match that you've got, and now look at the match we had from the all-time high of the Dow of 18,351. It also made a peak F, and then it came down, and then it rallied all the way back, but didn't make a new high. And it did it twice, all the way through to July the 16th, before it really turned down sharply. So I'm studying this, and I'm looking at it and saying, wait a minute, I think everything here matches. And it just dawned on me about 9 days ago. So I'm counting from the January 20th low, and what did we get? We get 50 days exactly to letter F, and we had started in my opening call newsletter, we had started shorting the Dow, and we added to the position the next day. And now what we've got is on April the 1st at 17,811, and what I showed was this question mark. There wasn't this bar here. That was this morning when I sent it out. There was just this question mark with this dashed line to show that there was a similarity between that bar, if you can see it, the fourth bar, after the November 3rd high. See that black candle?
I do. Yes, I do.
And look at the black candle. Now we're under the 9-period moving average. And if you look at the MACD, the moving average convergence divergence, it's opening up wide between the faster and the slow moving averages. And the slow stochastic has dropped all the way from the 96%. It was way up there, which is fabulous. As long as, in my work, as long as the stochastic is above 80%, that's usually a very good sign. All the books say it's overbought. That's what you want, is for something. Look at this one here. It held all the way.
So right now you don't like it, right?
So now I don't like it.
Right, okay.
But I've got to keep in mind that there's this same pattern that is forming, and it might get close to the 200-period moving average, which is at 17,133. So anywhere from, I'd say, 17,350, if it gets there, I've got to start saying, hey, wait a minute. Every other time it's rallied after it hit that line. So I think we're in for a very choppy period. But if you continue looking at the same waveform, we went short the RTH, which is the retail index, the market vectors retail index, made a peak E at 77.83. We got in about just over 77, and it closed it at 76.16. Look, that's the sharpest red candle ever since it broke out, since the low that was made back in February. So I'm watching all these very closely, because this is you've been talking about the choppiness of the market, how it's a trader's paradise. But what's been very interesting is that weekly charts in many instances have had a fabulous run and are actually still looking quite good. So I have to put this into perspective. Very difficult. We've got short positions, and I'm looking at the declines. How are they rotating through the different sections? So we've taken profits in certain things. We finally took profits in the IBB, the biotechs, and we're going to be looking to reshort that.
And folks, you can come over to our website at TFNN. You can test drive Basil's newsletter right now. Basil, you have a great one, a safe one. Look forward to the show tomorrow.
If you're looking
Thank you
to
very much,
discover
Tom.
a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We go over to the small caps to take a look at the IWM. Excuse me, folks. Sorry about that. So the IWM, what do we do with the IWM? It gets down to, oh, this will be really intriguing. See, the IWM is going to be a trip because what you have is that you have the smaller commodity stocks are in the IWM. We got to a low out here today of $108.13. You closed at $108.68. You did volume of 32 million, and guess what? You were going into 46 million. The IWM wants higher price, man. And in fact, it can be a small ABC structure on the way up. Yep, it's pretty wild. You know, go into the breakout area from the 29th, rejects lower price, doesn't finish higher, okay, but finishes inside the range, meaning inside the range into higher price. We go take a look at the QQQ. So the NDX 100, how we take a look at the NDX 100. NDX 100, see, this is pretty cool too. At the close, folks, you had some decent buys at the close. This is interesting. The small caps had this also. And the NQs at the close, well, the 3Qs at the close came in with 1.7 million shares on a 10-minute basis, which is a good indication. Well, it's not a good indication you're going higher, but it's a good indication that there's buyers out there. So what the Qs also did, we did 28.3 million shares versus the 29.9 million from the 29th. And that little baby right there is basically also saying that you back down, you had slightly lighter volume, it still wants higher price. So this market in general is going to be wild watching this whole thing shake out because the ABC structure inside the cash S&P, the one-to-one ABC structure is 2087.50. You know, the high that was generated out here on April 1st was 2075.07. You know, so that got us pretty close to it. This morning we're pretty close to it. We're only 20 points away from it. It gives up 24 points coming into it. The real kicker is going to be is that just a consolidation for a higher price? You know, we'll find out, and I suspect we're going to find out pretty quickly. Some of the higher volume stocks in this lower volume market, this is what you had. Oh, this is pretty cool. If you're watching Tiger TV, folks, the top. Now, when I put this up, this is what this is. This is inside the S&P 500. The top 24 stocks are almost all in the red. The only one that is not in the red is Marathon Oil is up 20 cents, and Micron Technologies is up 4 cents. Every other stock is in the red. You had Bank of America down 42 cents. Yahoo is down 49. Yahoo is going to have higher price. If you check out Yahoo, what I suspect you're going to see out here is this. So check out Yahoo. Yahoo right now is at $36.17. Yahoo actually went into its highs today with volume expanding. That's on the daily. That's on the daily. We put this on the weekly, and what you're going to see is that it looks to me like you're at 36.41 is game. And more than likely what this is going to be is this is going to be a Verizon AOL. You remember Verizon bought AOL. Yahoo right now is on a bidding block, and more than likely it's going to be, I suspect, Verizon that is going to go after Yahoo also, and they'll consolidate the AOL with Yahoo. You'll have Armstrong run the deal, and you know, one of the main reasons that Verizon bought AOL was for their video technology. You know, all ads right now, and when you're talking, you know, on the web, the video technology that AOL did develop is, you know, some of the best technology. It's a cash machine. That's what it comes down to. It's an exchange. It's a cash machine. That's what they're buying. And I suspect, you know, what's really cool. See, when you have an aspect that you're an AOL, and I know. What happens is this. AOL sounds so old, and it is old, but AOL owns so many other web properties, okay? Huffington Post, that's one of the largest ones they own. They own a lot of different properties. It just happened to be under the AOL name that they don't even really use anymore. But I'm sure that, yeah, well, they still do use AOL, but it's the other properties that they actually own that folks don't associate with AOL that are making the money on it. Now, that being said, what ends up happening is this. So picture when you have a company like that. Then you have a company like Yahoo. They're looking at Yahoo and they're saying, okay, they haven't monetized this, they haven't monetized that, they haven't monetized this, they haven't monetized that. That's how they come to the price. That's how they basically consolidate that. And the consolidation alone, when you have companies that are so alike, meaning the AOL brand, the Yahoo brand, you can cut the expenses and they cut them to the bone. You know, so. You know, I expect what you're going to see is that Verizon more than likely is going to be the winner. Well, we'll find out. There's going to be, I suspect that it's Microsoft. They're saying inside the rumor mill, Microsoft is not going to go after AOL once. I mean, Yahoo once again. They had bid on Yahoo. Yahoo should have took that bid years ago. They didn't take it. It's going to be, I suspect, Verizon, private equity, the cable companies. A game, but I just don't think that, you know, the cable company's got other problems that they got to basically grab very quickly because what you do have is that the migration going from the TV to the cell phones to computers is absolutely huge. And, you know how much that even each and every day I push, get on your cell phone, go to Tiger TV, go to TFNN. The delivery mechanism, folks, on the cell phone is actually, it looks to me like it's even clearer than it's on a computer. And you know, we have HD quality anyway, but I think it's because it's just so much smaller that maybe the phone itself makes it clearer. But everything's going to the phone. These phones we have are basically high-end computers, and the more the people use them and get used to them, you know, that's where the whole thing is going. You know, if you're in an office, yeah, you can get a computer, you get a larger screen. But what you can also do is that you can just take your phone and have it 24 hours a day, of course, because we all do. We have 5 ears, we have 5 phones. Only kidding, but you get the gist of it. Our phone number is 877-927-6648. Let's go take a look at the Gold Bugs Index. If we go to the Gold Bugs Index, what you're going to see is this. Right now, the Gold Bugs Index was up $5.17 today. We'll get the volume a little bit later, but I suspect we had an expansion of volume too, because enough of the stocks that high weighting structures inside the HUI also had volume. So the high of the XAU is 189.13. We are at 186.31. You know, bottom line, what that's saying to me is that this thing is going to get up and over it tomorrow. Now, check this out, because if we get real volume inside this move, you could have a monster ABC up. The A point on this is $99. That was the low that was established on the 19th of January. The B is 182. You know, you're talking about big money here. You're talking about $90. That would give you a price projection of $255, and right now we're at 186. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials closed down 174, NASDAQ off 72, S&P's down 25. We're going to be right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had ExxonMobil down 94 cents. You had Caterpillar off of $1.05. Citigroup was down 159. We had Oxy down 74. Johnson & Johnson was down 15 cents. You had Big Blue off 179. Let's go over to the XLE first. So we'll go into the energy market. We take a look at the XLE. XLE, folks, didn't back off. You did 13 million shares. You were down 36 cents. You're at $61.14. You pushed higher yesterday with 12. It was 18 million. You go sideways today with 13. Now, the XLE has two separate high-volume spikes, and I expect you're going to go to them. It's going to be wild watching this thing shake out. The closest one is March 17th, okay? March 17th, you went to 64.27, 28 million shares traded. I suspect that's going to get hit. That's a high-volume high. Next is the November 3rd area. The November 3rd area, $70.08. That is a high-volume spike also. Now, we're a long way away from the $70 area. And what you have here is this. At the $70 area, 10 bucks away from it. If we take a look at the if we go to ExxonMobil first, which is the largest weighting structure inside the XLE, XOM. Exxon is at 82.37. And what you have is that the November 3rd level is 85 to 87. Chevron, I expect that the Exxon's going to tag that baby. Chevron is the highest one out here. Chevron is at $94.79. That November 3rd area is 95 to 98. So those two, I suspect, are going to drag the XLE up. Well, those two is going to need more help. And inside the XLE, it's going to need more than those two. But those are the largest weighting structures. If we go take a look at the actual weighting structure, this is what you have. Exxon is 19%. Chevron's 14.8. Coming up the rear, you get Schlumberger 8.6. Pioneer Natural Resources 4.3. EOG is 3.8. The banking structure, the XLF. We take a look at the XLF. What we have with the XLF is this. Down 42 cents today, 41 million shares traded. You're coming into, look at that, man. This is wild. Now picture this. The banking structure, folks, is weak. That being said, however, is that what we did out here today is this. You're coming into the March 1st area inside the banking structure. Well, it's going to need a lot more than 41 million shares to get into lower price. Why? Because today we hit $21.85. $21.84 happens to be a high volume sign of strength. And we did 81 million shares there. So what you're going to see is that as you come into that area, and also, look at that, man. Oh, this is pretty cool. Actually, we also, on the trading day of March 10th, the low is $21.66. We had 77 million shares. That was actually a rejection of that low. That's a consolidation. And you can see you don't have any sellers, man. If you don't have any sellers in the banking sector, that's saying, banking wants to go higher. And I'm not bullish the banking sector, but guess what? That is saying it wants to go higher. The XLE is a bullish setup to at least hit the November 3rd high. If we actually go over and we take a look at the oil contract, what we have with the oil contract is this. You had a sideways move out here today. We're at $37.47. Yesterday, we did 751,000 contracts. Today did 557,000 contracts. That's big contract volume. You broke the downtrend that would have been in place since March 16th. I'll do the correlation for you inside the ETF structure, the USO, and you'll see inside the USO, that's what we did. So this is the ETF, the United States Oil Fund. Yesterday, you break topside, and we go from $9.32 to $9.63. You do volume of 45 million. Today, you go sideways with 28 million. It wants to run to this high volume swing level out here of $10.80. So coming into tomorrow, Friday, is going to be pretty cool watching how this whole market shakes out. Some of the commodities that we have out here, and don't forget, folks, our man, Mr. Andy Heck's going to be coming up at 5 o'clock with the Technomental Commodity Hour. Natural gas caught a bid. Looks like we're going to be starting to trade natural gas out here. Natural gas was up 4.9%. You had gold up 1.5, nickel was up 1.3, silver was up 1%. You had corn up 0.9%. You know, when we talk about all those commodities too, don't forget that if you are in the CD market and you want something a little bit different than a CD, that you may be able to get higher profits on or make more money on your investment with a guarantee that you don't lose your principal, well, as you come over to TFNN, you can hit the Everbank banner. And when you hit the Everbank banner, what you're going to see is this. They have a product, and there's a funding deadline on this, and it's within about it's a couple weeks. It's the 5-year market-safe commodity CD. Now, what this does is this. It's $1,500 to open the account. Your principal is 100% protected. You earn up to 70% of the upside payment at maturity if the commodities increase in value across annual pricing dates. It's an FDIC insured product. It's IRA eligible. And this is what is inside the product, folks. Crude oil, gold, silver, soybeans, corn, sugar, copper, and nickel. So what they do is this. They package this inside a CD. The fund, this account has to be opened by April 14th, so it's 7 days from now. I believe the fund starts on the 22nd. Let me just see here. I'll get to that exact date. I believe it's about a week later. At that point, your money's put to work, and if these commodities, they get repriced every year, and let's say they all go down first. Let's say they all go down. Bottom line, they'll price out. You get one price a year from then. Let's say they go down again. They'll reprice. That's what you get again. Then they go up the next 3 years. But let's say at the end of all those 5 years that it was a negative return. Well, guess what? Even though that was a negative return, you get your full principal back. 100% of your principal back, 5 years. Okay, now let's do the opposite. Let's say you're a commodity bull. Let's say that the commodities go up in 1 year. They price them out. You get that expansion up to 70% of that expansion. Next year they go up. You get the same thing. Next year they go up. You get the same thing. Now, as they average out, you can't get more than 70%, just so you understand that even over the course of that 5 years. Bottom line, though, it's a great product, folks. If, in fact, you have extra cash and you're in the CD market, check it out on the front page of TFNN. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And as you come over to TFNN, you're going to see right on the front page, you do this a couple times a year, you're going to see the Tiger Dollar sale. This one's a special one, folks. You can get up to 40%. You can make 40% on your money. It's the Tax Day Tiger Dollar special. You have till now until the April 18th. This year, April 18th is Tax Day. And the way this works is that Tiger Dollars are good for all products at TFNN. No expiration date, totally transferable. If you get any products right now, great way to save money. If you're looking for any in the future, great way to save money. You buy $500 in Tiger Dollars, you get a 20% bonus, you get $600 to spend. If you buy $1,000, you get a 30% bonus or $1,300 to spend. If you buy $1,500, you get a $600 bonus or 40%, which is an additional $600, which is $2,100 to spend. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call. I want to take a look at Celator Pharmaceuticals, ticker symbol CPXX.
Okay, so you get CPXX.
Yeah. Do they have any earnings?
They don't have any earnings. No, they don't even take in any money. So this stock, folks, just went from from $1.44 on the 14th of March to $13.75. So they don't take in any money, and they have a market cap of $573 million. $563 million. Yeah.
It's the only company that has. They're in stage 3. They're in the stage 3 phase for finding a cure for leukemia.
Well, then that's I don't.
Yeah.
Guess what? They don't have anything till they do.
Really?
So,
okay. And briefly, BIB.
BIB.
Yeah. It's ProShares Ultra Nasdaq Biotechnology.
So this is the 200% ProShares biotech fund. I like this. You know,
Yeah.
I mean, you know, you're 47. You know, this thing looks like the same with the IBB. I mean, this thing looks like.
Do you see the double bottom?
Yeah. No.
The oval bottom too. See, I was making a rounding bottom.
And you also got strength. You know, we got some big strength in this. You know, the first time strength came in was on April 1st. You did 1.3 million shares. You were going into 1.2. Then you followed up with 2 million shares, and you got to a higher high today with 2.3. That's.
Can you calculate the measured move, please?
Well, you got, let's see, you got 44. You got. The way you got to do this is that you don't. What you don't. Now, this was a great question, folks. You do not take a leveraged product, whether it's a double or a triple, to do a price projection. And the reason is that these are daily investment vehicles. They compound on the way up and they get defensive on the way down, okay? So what you have to do is that you have to go over to the IBB, okay, in order to do that.
Okay.
So the IBB is a 1-to-1, and then if I take the 1-to-1, the measured move on that, it took out the highs of 272, then you take the bottom of 240, so we got what, 32 bucks. You add that on to 272, you get 302, 304. And 304 brings you, yeah, it makes sense. That brings you up to where ICE, that's where it broke down from on the 11th of January. That's how that baby set up. Okay, man. Have a great one. Have a safe one. Don't forget, folks, okay, you stay right there because our man, Mr. Andy Heck, is going to be coming up and growling and prowling with you. Now, if you're listening in your car, folks, remember that you can get us 24 hours a day right on your cell phone, TFNN.com. Hit Tiger TV. You're going to get all the audio, all the video. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning. Go get them, folks.